Hey guys, sorry about that. We were trying to set something else up. It's not going to work. So, technical difficulties, off to a very late start. I apologize, but thank you for tuning in. Let me check that desktop audio is too loud. Let's turn that down. Hey guys, how you doing? Let me know in the chat room. Let me know if my microphone is at a good level. Turn that down a bit. Let me know in the live chat if my volume is okay. Let's go ahead and get started here. This is the live option show on Fox with Stocks. Yep. Been a bit of busy. Bit of a wild ride last week. Definitely seen my portfolio go down then up. Hopefully you guys are doing okay in your portfolios. Excuse me. And today's hot topic is emotion and dealing with it. First of all, if you are worried, stressed, or losing sleep over any one particular stock, that usually means that your position size is out of balance. I am feeling that way with Tesla currently, not because I feel bad about Tesla, but because unfortunately I am doing it in a margin account. So that is a bit of a challenge for me. And wish it was in a cash account now. So waiting for a pop-up. I've been selling covered calls against it, having to clear out other things in the account to make sure that we avoid the margin call and give myself that comfortable distance, which helps ease up on the emotions there. Let's go ahead and take a look at the SPY. Excuse me. So it still looks like, a major trend upwards. We're still doing nice on that. But a bit rocky here this last week as we dip down and basically get really close to touching that 200-day moving average. Actually, that's the 50 on this chart. This is the 20 and this is the 50. So there you go. But as you can see, that is a big dip, and then we are sort of where we were a couple weeks ago in terms of the SPY. So dealing with those types of emotions obviously is going to be challenging when you're wheeling, because a lot of the times you're wheeling on these types of stocks: Clean Spark, Fuel Cell, Riot, AMC, Mara, and I bet if we take a look at those, we're going to find that they're going to have a beta. I don't know if it'll show me beta on this one. Beta, there we go. See, we have a beta of 3.5. So, just to read it out for you, beta indicates whether stock is more or less volatile in the market as a whole. A beta less than 1 indicates that the stock is less volatile than the market, while a beta more than 1 indicates that the stock is more volatile. Volatility is measured as the fluctuation of the price around the mean. And basically what this means, a better way to understand this is beta is a multiplier compared to SPY. So it takes a stock and it says every day, close and open, what is the value of this? How much did this stock change versus how much did the SPY change? So if you're wheeling, you're looking for stocks with high volatility, therefore you're naturally going to be attracted to stocks with higher beta. And because we're dealing with stocks with higher beta, you can see that even though the SPY had a small dip, we're going to see a bigger dip on our stocks. In fact, it should be 3.5 times the dip. So if SPY goes down, for example, let's just say 2%, then this should go down by 7%. Meanwhile, if the SPY goes up 2%, this should go up 7% if it stays concurrent, congruent, whatever you want to say. Yeah. So anyway, if you're dealing with wheels, you're going to have to be able to ride that out. If you're feeling uncomfortable with that, First off, I want to bring you back to this. The wheel is not a just sell covered put strategy. Okay, if that's all we did, then obviously a big drop in the market would be a big dent against our strategy. Let me know in the live chat if everything's coming through okay. If my volume is okay. No one's talked to me yet in the live chat. Sorry we started late. But anyway, as I was saying, if you are wheeling and the market drops, this is not the end of the world. And people I see on Facebook and Reddit are freaking out because they're having all these assignments. And I'm still totally chillax mostly because I want to get assigned. If the stock market drops 20% and I get assigned on a bunch of stocks that I want to own, I actually look at this as the opportunity, because what's going to happen? I'm going to get assigned. It's not the end of the world. And then we write stock covered calls. We write CCs, covered calls. Well, what does that mean? It also means that we're going to continue to make premium, but I'm going to try and choose covered calls that let me capture some of that upside. So another way to think about this, if the stock market drops 20% temporarily, I get assigned, then it goes back up and recovers, then what's going to happen? I'm going to make 20% instead of making 5%. Now, I don't know about you, but I'd rather make 20 than make 5. That's just the way I am. And if it takes 1, 2, or 3 months, it's okay. If we were wheeling, we'd make 4 or 5% a month. So 20% inside of 3 months is still better than wheeling. By wheeling, I mean selling the cash covered puts. It's better than selling the cash covered puts. And we can turn around, like I said, we can sell a stock covered call. We can earn premium on that, and if we're lucky, we can put it at that previous price so that we get all the appreciation and the premium. It doesn't always work, but that's the idea, and sometimes it does work. You know, Clean Spark up here, where is it? CLSK, that's one that I was selling cash covered puts on, got assigned at 9, sat there and held it for a while, and then it went up to 27 and I sold. I actually went to 35, but I missed the opportunity to sell then. I wasn't even noticing it, paying attention to it. But I sold at 27. Let me know in the live chat how we're doing. Be sure to hit like and subscribe, whether you're watching us live or rewatching us on a replay. Just checking my screens over here. Now I've got some stocks for us to look at today. I've been researching some today, and we're going to continue with this research. So you're going to be joining me live as we go looking for deals. LAZR, Luminar Technologies. This is the first time I believe I've ever looked at this stock. And so I'm going to be writing down some information on what it is, what do they do, and we're going to do some calculations. So they've got 207, okay, we already don't like what we're seeing. They got 207 million cash on hand, but they are burning anywhere between 75 and 375 per quarter. That was December. Hopefully that's a large acquisition. Let's just go ahead and assume the 75 is normal for them now. They've only got 2.7 quarters left before they're going to have to raise capital. So we say they have a runway of 2.7. Now let's come down and look at the liabilities, the assets. They can borrow a lot of money, so that runway is not really indicative of anything because they can just borrow. They're at 13%. I'm just making notes of this in a spreadsheet I've got over here. Quarter over quarter is fresh. There's nothing there. Yeah. Looks like we had a big run up or an IPO in November, and then December. It's hit $33 a share. It's bounced back and forth. Still haven't crossed our lines here, our SMA lines. Anyway, insider ownership 30%, that's high. Institutional ownership 11%. Everything is negative except for their debt. All right, so we're probably not going to do anything with this, but it's a fun one to keep track of. just in case you were somehow interested in this company, let's bring up the setup. Excuse me. Taking a very casual Monday, a relaxed Monday. If you're freaking out, then hopefully I will balance you out with my casualness. Alright, if we come out 32 days, we're going to get an IV of 95. We'll get $1.60 at the money. That is what? Brain can't do it right now. 8% at the money. That's what we like to see. That's the minimum of what we like to see, because then we can get 5% somewhere out of the money. But there's a big drop off because we're dealing with 250 strikes. So that's probably right where we're going to end up at the 1750 if we wanted to do this. That's a 10%. 30 on the 15. I think that's 5%. No, that is 2%. I am way off today. Okay, I'm not doing so good on the math today. Anyway, 4% at the 1750, you'd have a break even of 1675. 16.75 divided by 1253. That would give you 18.5% downside protection and a decent return, but this isn't a company I'm going to do, at least not with this little bit of research. So let's continue on. We're going to look at Lyft, L-Y-F-T. Just making a note of this. Lyft. Come on. Go, go, go. Trading at 49.65. Revenue quarter over quarter is still negative 36.2. Per year is 46.8. Their asset to debt is getting high. 69. That's out of our range. They lose 400 million a quarter, and they've only got 500 million on hand. These guys are 2 quarters away from trying to raise more debt and probably not having the ability to. If you wanted to short a stock, this is probably something I would consider shorting. I don't buy puts or do shorts unless I'm balancing another play. So we won't be doing that ourselves, but hey, if that's what you wanted to do, when does the next earnings come out? Well, you'd have to wait till August to really see that play out. I think 86 days. So anyway, we are going to take a pass on that, that's for sure. Next up is MVIS, Microvision. That was a funky chart to start with anyway. Negative revenue. Electronic components currently trading at 1404. Negative 67% revenue. Pretty much dead in the water, but we'll come take a peek at it. Low debt. Only 14.5% debt. They're losing, well, they lost 6 this quarter. 6.2 plus 3.5 plus 2.8 plus 2.3. divided by 4. They lose about $4 million a quarter. So they have 18 quarters before they have to raise capital, so that's fine. That's good. Earnings come out in July. Well, the revenue growth is crap, but the rest of it looks okay. Let's just take a peek at Tastyworks. MVIS. In case these were companies that you wanted to look at. By the way, if you want me to look at any of your companies today, all you got to do is type it in the live chat room, and then we will take a peek at what you got. Wow, that's a lot of premium. 2.7 divided by 14. That is a 19% return at the money, a little bit above the money. So a little bit of intrinsic there. Wow. If you were to sell the $1.10, sorry. Yeah, that's a 10% return out of the money. So you get 10% return at the 11. That'll give you a break even of $9.90. Currently trading at $13.75, call it. You're gonna get 28% downside protection, but you're dealing with a crazy stock with negative revenue. Not enough history to show us the beta there. Let's go take a look at Yahoo Finance on this one. MVIS. Negative revenue. This shows us a beta of 4. Well, as long as SPY doesn't drop 5%, you might be okay. But the way the market's behaving, I'd rather move into closer to blue chips and away from these types of companies. NIO, the electric vehicle company out of China. Currently trading at 33.10, down off of its all-time high of 60. Revenue is insanely high, 481% over the quarter. They're at about 50% debt to assets. Yeah, about 50%. They lose 5 billion won a quarter. They have 28 billion won, so they have 5.5 roughly left in runway. Earnings are coming out on the 3rd of August. We have 78 days till earnings. This is a much better time to do NIO than it was before their last earnings. It's kind of tempting. Let's go see what the ROI is on NIO. We go 32 days out. At the money, you're getting $1.24 per 30. Only 4% at the money? Really? That is trash for Chinese company. That's sort of $3 below the money. But still, the next step out, you're only getting 40 cents on the 25. You're only getting 1.5%. No. Can't do this one. Thank you for the likes, I appreciate that. No one's in the live chat with me today. Feels a bit boring and lonely. Would love to hear from you guys. Oh, excuse me. All right, moving on to the next one. We're looking at Palantir. PLTR. Come on. Wallmine does this sometimes. It won't let you type into the chat box sometimes. Currently trading at 20.08. By the way, if you're interested in Palantir, I'm sure you know from the news that Kathy Woods at ARC has sold a lot of their Palantir shares. But other institutions are stepping in to buy now that they're on the decline. I did not see revenue quarter over quarter on this. Let's go check out Yahoo. No beta, not enough data. All right, so total revenue is growing a lot this is yearly. 595 to 742 to 1092 to 1204, and that's already outpacing 2020 by a lot. That's good revenue. Why do we have 3 years worth of data and yet we don't have revenue quarter over quarter displayed on Wallmine? Wallmine needs to get their stuff together. Wow, that's a lot of cash on hand versus the runway. I didn't realize how good the financials are on Palantir. We're looking at 40% debt. We're looking at a very long runway. Well, September they spent 850 million. They're spending 600 million a year, except for 2020 they spent $1 billion. I'm going to use the billion as our number here. So we assume that they're going to spend 250. So they've got about 8 quarters. So they have just enough cash to be on the good side where I like to see them. Earnings date not displayed. Come on, Wallmine. And earnings date not displayed on Yahoo. Let's see if it's in the platform. Nope, earnings are not announced. Okay. We don't know when the next earnings are. We can assume it's 3 months out from whenever the last one was, though. If we look at the money, getting $1.43 on the 20, that's a 7%, but that's a little bit of in the money. So we can try and find something. You're only getting 3.5% at the 18. That's only $1.70 distance from in the money. That would give us a break even of 1736 versus 1974. You're only getting 12% downside protection. That's unfortunate that it's not higher. IV's too low. It's only 70% here. But if you were I know a lot of people are super bullish on this stock. If you had really good inclinations on holding the stock long term and you don't mind getting lower premiums and lower downside protection, that's fine. But for us, low DSP, low ROI, pass. This is the super exciting work of scanning for stocks. By the way, if you guys don't like doing this yourself, we do offer a service through theoptionsoracle.com. They will do it for you. That's theoptionsoracle.com. For $100 a month, they'll do it for you. You get monthly newsletters with the stocks and to picks, the option chain to play, basically. It's option signals. Anyway, let's continue on. Peloton Interactive. Their treadmills eat babies. They had to recall all of them. 95.02. Off of their recent all-time high of 166. That's a discount. Revenue quarter over quarter is 140%. That's ridiculously high. It's beautiful. Earnings date not shown. Liabilities to assets, moderate, looks like 40%. 1303. Actually, it might be less than that. 2981. Yeah, I said 40%, right? 43 and a seventh. They are losing money. Well, they made money. June, September, December 2020, COVID. Everyone's inside buying equipment because they can't go to the gym. But then this quarter, they went -8. Previously, they were -245 and 71. Let's go ahead and assume. Let's assume the worst case. Let's assume that they're going to lose 200 million a quarter. They've still got 10 quarters before they're going to have any problems on cash. I actually rate this pretty high. I'm giving that 4 stars out of 5. That's much higher than I thought it would be on Peloton in terms of the financials. 10 quarters cash, 43% debt to asset, off of the all-time high. Major recall. I'm gonna give that a 3 stars out of 5. Let's go take a look at it on Tastyworks. Let's see what the premium is. Implied volatility is a little low, 68%. 95 is at the money by 50 cents. So you're going to get 615 on 95. Only getting 6.5% at the money, so good luck getting 5% out of the money. If we come down here, 2.76 divided by 85, you're only going to get 3%. Your break even is going to be 82.24. 82.24 divided by 95.6. You're getting 14% downside protection, only 3% ROI, so not good enough to wheel, but if you're doing credit spreads, this might be something for you to look at. Low ROI, low DSP. So we're not going to wheel it. Take a pass on that, but could be credit spreads, or you could just do covered calls. A lot of the numbers there looked good for covered calls or credit spreads, but not cash secured puts. Let's actually pretend we're going to do a covered call on this. What would we get on a covered call? We'd pay $95.75, and then we could sell, let's say, $360. Notice I'm not dividing by the strike, I'm dividing by the purchase price. That would give you 3.7% return monthly. And then you'd get a cash out, you'd have $13 of upside. So you'd either make $13 or you'd make $3.50, or of course you could just lose money. But if you were long-term bullish on this company, then you could do something like that. we could... What could we do? I mean, if you were super bullish, you could come down here. You could sell 2 of those and buy 1 of those. No, I want to only buy 1 of those. You're only going to get an 8 cents credit. You have to go farther out. That's only 30 days. It's not worth doing it. Anyway, I was just looking at a crazy bull spread, but you'd have to get it farther out. I'm not going to play around with it too much. We've only got 3 minutes before the bell. We've had 0 people chat in the live chat today. We've got 3 likes. I do appreciate that out of the 5 viewers that we currently have. We'd love to have you guys share this and get this information and these streams out to other people so they can benefit. Everyone deserves the opportunity to retire happy, healthy, and wealthy. Let's go take a look at QS, QuantumScape. I've looked at this a couple times. Woo! Glad I didn't buy any in December, huh, boys and girls? 108 down to 27. That is a train wreck. Earnings are May 11th. That already passed. We're not seeing revenue quarter over quarter on the charts. It annoys me. This is auto parts and equipment. Is that right? What did they get into? I thought they were a little bit more special than that for QuantumScape. We got only 2 minutes before the bell. They were doing the solid state lithium batteries. Yeah, it seems kind of silly to call them auto parts. They are solid state battery company, which might work in electric vehicles. Might find other uses for it too. But they are a battery company more than an automotive company. Losing 1.2 billion, not million, billion per quarter in the last quarter. They only have 113 million in cash. They've only got $1 billion in assets. That is a big red no for me. That is nearly insolvent. What the heck did they buy? Where did they spend all that money? 713 divided by 1066. You're going to be at 66% debt. With a runway of negative runway. They are in danger. Will Robinson, danger, danger. All right, so QS, insolvency risk, pass. 1 minute before the bell. I want to see what the SPY is doing. Okay, there we go. We are down a little bit so far. And another red day, and Tesla pretty much giving up all of its gains from last time. We were up 18, now we're down 12. Big losers today are Mara and Riot. Looks like Bitcoin, yeah, of course that makes sense. Bitcoin was taking a hit. CleanSpark down 6%. CleanSpark coming in cheap at 1460. Let's go take a look at them. 130% IV at the 32 days out. You can get about $1.05 out of this, I bet. You can get $1.05 on the 1250 maybe. That's 8% at the money, still not that great. And not actually at the, well, okay, you're actually 2 whole dollars below the money on that one. That's practically being a whole strike out. Closer to being at 5. So you're getting 205 at the 15. Yeah, you're getting 13.6 at the money. But you're only getting 25 cents at the 10. If you could get that to 50 cents at the 10, it might be worthwhile. Boop, boop, doo, doo, doo. Down, down, down. Of course, that's because they're tied to Bitcoin. That's why they're down so much. They were a green hardware company where they made agnostic components for lots of different electronics. Where did my music go? Yes, I'm still listening. Thank you, YouTube, you annoying piece of crap. Anyway, apps down 3%, PLT down 3%, Vuzi down another 2%, Tesla down 2%, Virgin Galactic down 2%, ARC-G down 2%, Kodak down 2%, Sage 1.5%, GRWG 1.5%, AI down only 1%, less than that, 0.5%, NBEV up 0.24. Did I open any positions on NBEV? I've been looking at them a lot. I don't remember if I opened anything. I do have a covered call on NBEV. I had a crazy leap play. It's part of my leap strategy. I have a cost basis of $1.24 on NBEV. All right, what do we got that we need to worry about? Vuzi in the money. We sold the 22. We are going to get assigned on that one. That's not very happy. InnoData, I sold covered calls on that one. We're in the money. We got 4 days left. 2 of them are going to get taken away from me. I have to roll way high to get additional credit out of that. I'll probably just let them go. Maybe. Plantronics, we sold the 35 put. We're going to take a hit on that. Yep. Not much credit to roll for 30 days. ARC-G, I sold multiple puts. This one might bounce back a little bit. May 21st, 76. Looks like I'm going to own a bunch of ARC-G either way. I'm okay with that. It's a 5-year play for me. I need to consider managing that as it gets closer. I've got 2 puts at the 65 though. Good credit. Rolling it forward. Yeah, I'll roll that forward. We'll see if that goes through. It's at the mid. And nope, we're not going to be able to. We are negative buying power. Cannot roll unless I sell something. Okay. Virgin Galactic. We've got a bunch of puts expiring, but they don't expire for 11 days. All right, the rest is fine. The only one we really wanted to roll was, which one, AI? AI. But we're short a little bit of cash. We got 4 days. We could put cash in if we wanted to really roll it. All right, got 6 of you, 5 likes. That's actually, we're doing pretty good in terms of likes. Appreciate that today, guys. We got 7 people watching, 5 people liking. We're at 9:36. We've only got 24 minutes to go. I do apologize for starting late today. We were trying to do We're trying to do StreamYards and stream on multiple channels at the same time. We've hired somebody to help with that, but he didn't get it up in time. He thought he could get it, so we were waiting. That's why we started late, but we didn't get there. And as a reminder, I want to live forever, and I want you to live forever. Do consider donating to the Sens org, and be sure to like, subscribe us so that we can support them, so that everyone can live forever. We do have also a referral link to Tastyworks and a tip jar if you want to tip us cash or Bitcoin or Ethereum. A few of you do tip out every week, and I appreciate that. It's not much, but you know what? It keeps us going, it keeps us motivated, and that's the important thing. Let's go ahead and keep looking at some stocks here. We looked at what we needed to manage. I want to look at rocket companies, symbol RKT. All right, institutional ownership is nice and healthy at 63%. They are down. They had a very big spike to 37 at one point, and they are now down at 17.20. Somebody had to buy at 37. That's kind of crazy to think about that. Even after all this trading, to see a big spike and to think, you know, someone had to be buying there at 43. It doesn't just magically get to 43. Somebody had to actually be buying at 43. And now they're in a world of pain. Anyway, revenue quarter over quarter. Excuse me. I'm liking this jam today. A little bit, makes me a little bit tired, but I like this beat. What are we looking at? Revenue quarter over quarter 235. Current price 17.22. I should track its previous all-time high as well. I should add that to my spreadsheet. Oh, debt is disgusting. We got 26,426 divided by 34,732. Eek! We got 76% debt. But they are a positive. They are a net positive company, so they're not going to have any runway problems. So that makes up for their debt. Okay. 76% is still a lot. Oh, they do dividends? I'll have to look at that. Anyway, their last earnings date was May 5th. So that's almost 2 weeks ago. I wonder how much they paid in dividends last time. Well, this is showing free cash flow negative. This is showing income positive. Whoops. Come on, Yahoo. I don't want these pop down things getting in the way of where I'm trying to click. See, this is annoying. Yahoo, get rid of that. Anyway, this is a dividend paying stock and it's net positive. 140, 120, 57 million per quarter. And 3 billion in June 2020. This is a company to keep an eye on if it's got dividends, especially. RKT dividends. Any of you guys make trades on this or done any research on ticker symbol RKT? Yeah, so look at that. They paid $1.11 in dividends. They're currently trading at 17. That's a big dividend for them, though. Normally they pay 30 cents. And they haven't paid, wow, they didn't pay since 2015. This might have been a special dividend. But they paid that in January, February, March, April, May, June. So they might be coming up here in June, getting ready to pay another dividend if they stay on track. But what do they normally do? They normally do 4 a year. Okay. I'm kind of liking this company now more. I want to check this out some more. I didn't know they paid a dividend. What else do I need to look up? That was it. If they continue to pay a dividend, I'm going to give that a 4 out of 5 stars. They are high on debt, but good on income. So let's go take a look at their premiums. Applied volatility is a little low. We're looking at currently trading at 7. What the heck are these numbers? Are strikes really 8.89? What the heck? Yeah, that's not normal. What the hell is that? That reminds me of like reverse splits or something. Why is it ending in 0.89? Is this a bug in Tastyworks? You guys are seeing this, right? I'm not the only one seeing this. 30 days out, strikes are ending in 0.89. That is the June 18th. Come on, get back to there. June 18th. Yeah, what the heck is with these strikes ending at 0.89? Oh, I feel like I'm stepping in the twilight zone. Thank you, Ian. Good to see you again. We'll take a look at MU in a second as soon as I finish up here. Okay, let's just go 39 days out because I don't want to think about those crazy 0.89 strikes. It's hurting my brain. I get $1 at the 17. 6% at the money, so it's kind of garbage, kind of low. If you're getting 6 at $1, you'd be lucky. There's a big spread here. Our last was 41 cents. Yeah, not much volume on this. Not much open interest. Let's assume that you got 40 cents at the 15. It's only 2.5%. It give you a break even of 14.60. Currently trading at 17.20. You're only getting 15% downside protection and only 2.5% on Rocket. bit low, but it is a, well, if it is still a dividend paying stock. All right, but let's add that to our watch list. I want to do some more research on that one later. Give me a second here. I want to research that one. And Peloton, I think, also turned out to be okay. And we're going to do MU. Here's our next one. Okay, now this music has gotten too chill. There we go. Bring it up a bit. Super healthy. Institutional ownership 85%. Revenue growth 30 and 19. Currently trading at 79.09. Let me make a note of that. They're in the semiconductor business. $79.09. 30, call it 20. All right, if we looked at debt on assets, we're looking at 13,472 divided by 54,135. That should be good. You're looking at 25% debt. That's really great. You're looking at positive quarterly income plus 6.5 billion in cash. They've got infinite runway. Earnings come out June 30th. You've got 44 days before earnings. Financials look good. Price action actually looks okay. For me anyway. Some of you might read charts differently, but they recently had an all-time high of 95.19. They dropped as low as 76. They're on the way back up $3. They have a beta of 1.46. This is a relatively safe company. I bet we're not going to get much premium. I bet we're going to get 4% at the money. That's my wild, wild guess. 78.91. So let's go to the downside. We're going to say that you're going to get $3 at 77. And you're getting 3.8% at the money. Did I say 4% at the money? Was I dead on? Somebody give me a tip and a like if I was dead on with my guess. Now technically it's a little bit below the money. It's $1.40 below the money. But there is no strike at 78.50 or 250 on the strikes. That would give you a break even of 74.50 on 78.82. That's dog shit downside protection. That's the only problem. Not volatile enough. But there's your answer, Mr. Ian. If you want to play quote unquote safe, I personally like to see more downside protection to be safe. You could, you know, if you were to do $1 at 70, you're getting only 1.5%, but then your break even would be $69 a share. I doubt you'd touch that in 30 days before earnings. Could be wrong. Definitely not going to see this company go to zero anytime soon, not when they've got 6.5 billion in cash and only 13.4 billion in liabilities. They could pay down anything they want. So that is what I call a super solvent company. Super low debt, super high cash on hand. Actually, it's not super solvent. I call super solvent when they can pay off their entire liabilities with the cash on hand. They can't do that. They're 50% of that. So it is not super solvent, but very solvent, very safe company. But you're really only going to be looking at about 1%, 2% selling premiums. Might be nice in this environment, though. Actually, now that I think about it, too bad they don't pay dividends. This would be a much better company if it paid dividends. If you're going to mix your portfolio, I'm thinking about doing that. You don't know where we might be at the top of this hot market, starting to cool down. I mean, it certainly feels that way over the last week and a half. So something like MU might be good to balance out the portfolio. You can also do this technically as a credit spread, just to lessen your buying power effect on it. Buy something deep out of the money with no real intention of ever dealing with that put that you bought, but just using it to half your cash that you have to set aside. Because if you pay attention to me on this one, Ian, if you just do this on its own, what happened there? Buying power effect 739. Oh, it's giving you really high. It says really high margin. You can get 10-to-1 margin on this thing. So you don't really need to do what I was just describing. Because that's actually worse. Yeah, don't do this as a credit spread then. Well, if you're not trading in margin, if you're trading in cash, then you can do what I said. You go deep out of the money, you buy a 1 cent, 2 cent put, but that frees up half your capital if you're on a cash account. If you're on a margin account, though, you can pay attention to this. They're giving 10-to-1 margin on this stock. It's very tempting. I might go ahead and put one in. I'm going to try and squeeze one out at 107. Can't do it in that account. Sure. And got filled right at 109. Good one, Mr. Ian. We'll use that to balance out the portfolio for a bit. Although it still goes down with the rest of the stock market, but this is not a stock that you have to worry about an individual company going out of business. Interesting. Pardon me while I look over here at my other account on another screen. All right. 5 minutes left. Not happy to see another red day in the stock market. That could be the sign that things are going to cool down and actually turn against us. And the wheel strategy is a bull market strategy, so if it really does turn on us, we need to consider moving to safer companies, or actually switching strategies and refocusing elsewhere. Anyway, for the moment, let's take a look at space. Next earnings are in August. They recently came out with earnings, currently trading at 1632. Revenue is nothing. Debt to asset ratio is pretty much 50%. 43%, actually. I was wrong. Closer to 44%. Cash on hand, well, they've got a bit of a mixed bag. 129 plus 445 plus 76 plus 62 divided by 4. We're looking at 178. 629 divided by 178. Only going to get 3.5 quarters out of that. If this high spend here in December is indicative of an average. We're looking at 9th of August for earnings. So you got 84 days before earnings. Have they announced? Doesn't look like they've announced, at least I'm not seeing in the news, an announcement for the next test flight or whether it's being pushed back. About 3 minutes left to go. Reuters isn't going to give me the news, but it said here in the headlines, Virgin Galactic evaluating timeline for next test flight, comma, shares drop. They got a little bit of a quote here. Following Eve's last post-slide inspection, we tagged the potential wear and tear issue as requiring further evaluation and analysis to see if any additional action is necessary, said Michael Moses, President of Missions and Safety. Well, it sounds like they don't know if they're going to push it back or not. It sounds like, if I'm thinking about what they're going through, they're probably trying to solve that as quick as possible, and they don't know if they're going to have to push back their test flight. And they only said in May. They didn't say when in May in terms of their timeline. So they're trying to probably get it into May, if at all possible. Anyway, let's go look at a gambling company. TNA Evergreen Gaming Corp. I looked at DraftKings already. DraftKings was pretty mediocre in terms of the financials. I was hoping to see better on DraftKings. TNA is losing money quarter over quarter. Currently trading at... Oh, why am I even looking at this? Is there another TNA? Oh, there's an ETF called TNA, and never mind. Never mind. I knew that. Okay, pass. Let's take a look at Uber. Thank you for those of you that tuned in. Sorry for being late today. We got 7 people watching, 5 likes. If you're on the replay, make sure you hit that like button. Also, click that description. You can find a referral link to Tastyworks. You can find out more information about us, and if you feel inclined, you can tip us for sharing the work that we do. Uber is negative 18%. And we do try and support the SENS organization because we want you and everyone else to live forever. We want to cure aging. That's not a joke. That's science. Let's make it reality. Let's check out Uber as our last company for today, and then I'll be signing off. Today we've been listening to slow jazz. 60%, 59% to debt. They are accustomed to losing $1 billion a quarter. They've got maybe 6 quarters left in them. Earnings, when did we say earnings are coming out? 5th of August. It gives you 80 days till earnings. All right, one more. I said we're going to end with Uber. Let's do one more. Come on. We're going to do Workhorse. Workhorse is an EV company that also does drones. Everyone keeps forgetting to talk about the drones that they do. Institutional ownership is 33%. Revenue is insanely high. Currently trading at $7.84. That is a bargain from December. Look how crazy these numbers are. Revenue growth is 500%, and they're going and sliding downwards to $7.84. Debt is 204 to 479, so we're below 50. We're at 42.5. That is a good thing. Got a mixed bag. They were profitable in December. Every other month they are negative. 2020 they were overall positive because of that December cash influx. They did not get the USPS contract. That's what hurt this company. They were overhyped. That's what hurt the stock price. They were super overhyped, and then they didn't get the contract as they gave it to Ford. I'm sure there's lots of backroom dealings on that. But let's assume that they're losing 110 a quarter. They don't got much cash. They've only got 2 quarters in them. The debt ratio is fine though. They can raise debt. Earnings will come out 10th of August. I just wish I saw more cash on hand. I expect them to raise capital. I expect them to get debt. And last little bit, let's go ahead and check the premiums on Workhorse. We go 32 days out. Nice, implied volatility over 100%. That's what we like to see. You can get 10%. You can get more than 10% at the money. Closer at the money is at $8. But then it drifts off a lot. 0.33 divided by 6, I think that's our 5%. And you might be able to bump that up to 0.35. That'll give you close to 6% at the money. Your break even would be $5.67. Compared to $7.82 today, that is a 27.5% downside protection. So I like the numbers on this for the setup. If you were looking to make a play, the only problem was that runway, a little bit low on cash. That revenue though was really good. Revenue quarter over quarter growth was fantastic, and year over year was fantastic. What do we say we're going to get if we did 0.35 on the 6? That is a 5.8. 32 days. And that's very doable. Anyway, guys, if you're looking for a stock pick today, check out. We looked at a bunch of things today. What did we look at? We looked at LAZR, Lyft, MVIS, Neo, Palantir, Peloton, QA, RKT, MU, and Workhorse. The two that I liked the most today for those were Workhorse and MU. Although a couple of them are worth going on to the watch list. Peloton and RKT, I believe. All right, boys and girls, thank you guys for watching. Thanks for tuning in. Just for a quick heads up, we are looking to change the formatting. We might switch Wednesday, instead of doing live trading, we might do interviews. So if there's any traders that you know are good in the space, especially options trading, let us know and we'll consider inviting them for an interview. And then we might also shorten the program to about an hour. We might do 8:45 to 9:45 or 9 to 10. Not sure yet, still making those decisions. So do stay tuned. We are going to try and also increase the fanfare and make things look a lot nicer on here. That's all for today. Have a happy trading. Good morning. And I'm signing out from Bali. So good night to me and good day for you. Cheers.